This week, the AI map got redrawn. Microsoft and OpenAI ended exclusivity. Google Cloud grew 63%. Meta raised its compute budget to $145 billion and cut 8,000 people the same week. Apple printed a record March quarter, and the Pentagon handed classified network access to 8 tech companies, but not to Anthropic. So this week stops being about AI hype. It's about who got unlocked, who got locked in, who got paid, and who got cut. Welcome to your AI Money Map for April 27th to May 3rd. On April 27th, Microsoft and OpenAI announced an amended partnership. Microsoft's license to OpenAI IP through 2032 stays in place, but it's no longer exclusive. OpenAI can now ship products on any cloud. Microsoft will stop paying OpenAI a revenue share. OpenAI keeps paying Microsoft through 2030, subject to a cap. The AGI clause that complicated the original deal, that's gone. What this really means: AWS and a Google Cloud just got a legal path to OpenAI workloads. The frontier model layer is no longer a Microsoft side product. It's a multi-cloud business. Then came earnings. Alphabet posted $110 billion in revenue, up 22%. Google Cloud grew 63% to $20 billion. Cloud backlog nearly doubled to $462 billion. Pichai's words on the call: "We are compute constrained." That's not a complaint. That's pricing power. AWS grew about 28% to $37.6 billion, also driven by AI infrastructure demand. Combined big tech AI Capex for 2026 is now tracking above $700 billion. This is one of the largest industrial buildouts in tech history, and it's still being raised every quarter. Meta raised 2026 Capex guidance to $125 to $145 billion, up $10 billion from the previous range. On April 30th, Meta sold $25 billion of bonds to fund it. Tranches running out to 2066. Same week, Meta confirmed roughly 8,000 layoffs starting May 20th. Zuckerberg told the company directly, quote, "We have 2 major cost centers: compute infrastructure and people." The stock dropped about 9% after the print. The signal is clear: compute is crowding out headcount, and Meta is saying it out loud. Apple printed $111 billion in revenue, up 17%. iPhone $57 billion, up 22%. Services $31 billion, an all-time high. Cook called it Apple's best March quarter ever. Apple is the cleanest counter to the AI Capex panic. No $100 billion data center binge. Strong product cycle, expanding margins. The open question: what happens when agents become the new interface and the next CEO has to answer it? On May 1st, the Department of War announced classified network AI agreements with AWS, Google, Microsoft, NVIDIA, OpenAI, SpaceX, and Reflection. Oracle was added the same day. Deployment is at impact level 6 and 7, the most sensitive tiers. Notably absent, Anthropic. The company has been in a public dispute with the Pentagon over usage guardrails, surveillance, autonomous weapons. Reporting says the White House has reopened discussions, but for now, Anthropic is on the outside of one of the biggest AI revenue lanes in the country. Decision support, intelligence analysis, logistics, autonomy. These are long-cycle, high-margin contracts. AI is now a national security category, not a chatbot category. Google is testing Ask YouTube, a conversational AI search experience that pulls answers out of long videos and shorts. For creators, this changes the optimization game: structure and answers, not just thumbnails. And in Europe, Italy's AGCOM asked Brussels to formally examine Google's AI overviews and AI mode, citing publisher traffic loss and pluralism risk. The next big AI fight isn't safety, it's copyright and traffic. Meta acquired robotics startup Assured Robot Intelligence. OpenAI hardware rumors keep returning. AI is starting to leave the chat window. So what actually happened this week? 5 things. 1. The AI stack is unbundling. Microsoft OpenAI exclusivity ended. Cloud, model, IP, and defense access are negotiated separately now. 2. Compute crowds out headcount. Meta said it on stage. The numbers say it everywhere. The career signal is to move toward AI-leveraged engineering. 3. Defense AI is now a Tier 1 market. 8 vendors deep, classified, network deep. 4. AI search and publisher economics are heading into the lawsuit phase. Expect licensing frameworks by 2027. And 5. The interface war is back. Agents, devices, robots. Everyone is positioning for the post-app world.